Good morning, everyone. Happy Friday. It's 6:30 a.m. My name is Amal, and I'm here to do your Alpha Trade morning analysis. Lots to talk about today. Tons going on in the stock market as well as Bitcoin. But today we're going to cover Bitcoin. I'm going to go over an analogy that I've spoken about before, which is the boiling the frogs analogy. And I'm going to show you how that relates to the market structure that we have, the trading psychology that I'm seeing pervasive through Twitter, through the markets, and how that's going to impact the price of Bitcoin. And then we're also going to talk about the S&P 500. We have a pretty big day coming up due to some options volatility. So it's going to be a lot of fun, a lot of interesting analysis today. Hope you guys pay attention. And by the end of this video, you'll see exactly what my thoughts are on Bitcoin, what we can expect, and hope y'all enjoy. Let's get to it. All right, so first things first, what I want to show you guys is the 1 hour time frame. Okay, the 1 hour time frame I think has made it kind of abundantly clear that we've been trapped in this descending kind of movement. I wouldn't call it necessarily a channel, but at best we could probably draw like a trend line or something kind of like this. If you want to draw it like that, we could even draw it, from this high through these wicks. There's not a perfect way to draw this, but in either case, I think there's a good way to draw the descending trend line resistance that has been holding price down, putting in lower highs over and over again. And especially given the fact that we've pretty much pushed through the June monthly open right here, which was, in my opinion, a key and important point. The fact that we broke through the June monthly open, excuse me, my voice is giving out. The fact that we pushed through the June monthly open, and we haven't quite, like we did that back here, we haven't quite been able to close and stay above that area, as you can see. And we keep rejecting it from the downside. It tells me that price is definitely weak and we're pretty close to rolling over and heading down further. Another way to look at prices a little bit more cleanly is something like this. This descending parallel channel, which I've spoken about before, this is the descending resistance zone. And we've hit that zone pretty perfectly right there and right there. And we actually broke below this rising wedge. I know this is not the most perfect rising wedge because typically you want to see it a little bit higher to the upside and more tighter as it comes in. But I would probably say this is enough to warrant the alternating touches. Like you got to touch 1, 2, 3, 4. So you guys got to understand that when you draw patterns, right, you want to see alternating touches to the up and down side. Okay, so in this particular pattern, the touch from top to bottom is clear. Same thing with the descending parallel channel, right? There's a touch at the top, bottom, top, and then now we're looking at a touch at the bottom of this descending parallel channel. Now this one is not perfect. I've only just generally drawn this. In any case, you can even move it towards something like that, and that's okay too. But in any case, when we're looking at the price action right now, what seems to have been happening over the past several days is that we've been continuously kind of bleeding down slowly, right? So I actually made a video in August 2019 to illustrate exactly, something similar that was happening in the markets in terms of the notions and the feelings that we're getting right now from most people. And so I made this video somewhere around here. And so I'm going to play that, okay? And we call it boiling the frog analogy. All right. So it goes something like this. Okay. So let me play it. Make sure the volume is visible. Share computer sound. Okay. So
now let's get to the boiling a frog analogy. Okay. Now, boiling the frog in the traditional markets and the financial markets is sort of a term that's seen as, complacency and false exuberance among novice traders and investors, and maybe even some, somewhat experienced traders. Okay. And so what does that mean? right? So basically what happens is, the theory behind this whole boiling a frog is that when you put a frog into warm water, you slowly turn up the heat on it, okay? And slowly turning up the heat, the frog doesn't really know that it's getting boiled, right? And so this effect that you're seeing me draw on the prices, this is the effect of boiling a frog, okay? Now it doesn't happen that the frog doesn't know that it's being boiled until prices start collapsing. And this is where the heat gets really turned up on these frogs, right? And so when this happens, then they realize, oh shit, looks like we're really going down and I just lost another 10, 20, 30%, right? So that's what it means to boil a frog. And
Okay, so I made that video in August 2019, right? When I think this price action was happening right over here. And when I saw this thing developing, which was a descending triangle, I had told my members that I'm shorting and more than likely this is probably going to break down. Now my downside targets were close to about 6,000 or 5,500, which we didn't really hit, until months later. But in either case, we did hit them, right? Because the measured move from this descending triangle, as well as all the pent up pressure from the sell side momentum. So what we're seeing right now is something very similar, okay? The whole boiling the frog analogy is the same thing that's happening in the markets right now, where I'm seeing a lot of people, especially on Twitter, talk about, getting bored, or talk about, okay, well, we spend so much time here, we have to push up. And what they don't realize is after spending so much time in a range and seeing all the signs of distribution, which at least I think is distribution, they're not convinced that over the last 14 or 20 days now, actually, that we put in this high, put in this lower high, put in this, another lower high, especially with, this low, lower low, and lower low. I'm not going to count this wick because this is only isolated to BitMEX, but most exchanges had a low of the wick somewhere around $9,200 or $9,300. Then we put in a lower low and then another lower low right there. So it has all the characteristics of a local downtrend. And I think people don't want to accept that is because they either missed out the short up here, or they think we're going to get squeezed way the heck up here and then we're going to dump. So everyone is just kind of waiting for an opportunity, either for this thing to break up, push higher, and they might get trapped buying along, or they may not get an opportunity to short higher. So in our community, we shorted anywhere between $9,700 and $9,900. So our short average is doing pretty well. We're not largely concerned with where price is right now. Even if we get a squeeze, I don't see it going much past maybe 9,600 at most. So, I really don't think we're going to get that squeeze towards like 9,900 or 10,000 or anything like that. Okay. Looking at this price action, which I've stated before, you can see as long as we don't break above this descending trend line resistance up in the green box, I don't see us even needing to have a conversation about more upside, because this is what we're trapped in. Okay. The RSI, the momentum oscillators, the money flows, you could even see the OBV right here. I mean, it is completely just bled down lower and lower. This is the clear indication of money not really coming into the asset and quite possibly leaving the asset. So I don't get where the bullish sentiment actually comes from, right? More than likely, I've stated before, this is in large part distribution, okay? Now, going forward, when you start to hear people talk about being bored, or people talk about, when will Bitcoin make a move and upside is imminent, all that stuff, you gotta be cautious. At the very least, be cautious. You don't have to be bearish like I am. I've been bearish for like the last month and a half, okay? Usually when it comes to identifying distribution, I'm a little bit early, or I could just be totally wrong. In this case, I think I'm early. I don't think I'm wrong. But if I'm wrong, I'm proven wrong above 10,600. I'm not going to get proven wrong over here just because we have a mini short squeeze, kind of like we did with a spike here and a spike here, okay? Even with this spike right here and this spike, I didn't change my mind because there's nothing to change my mind with. So to identify these thought processes that you see from people talking about more upside or the market is boring them to death, I urge you guys to read this book. It's called Trading in the Zone. This is one of the best books by Mark Douglas, where it helps you understand your own psychology and the psychology of other people, of how they react in the market when the market aggressively moves up, moves down, how you deal with losses, how you cope with profits, how you cut, winning positions, losing positions, many other things that we encounter in terms of our mindset on a day-to-day basis, okay? So I think this was by far one of the most impactful books in my understanding of myself in relation to the market, but also more so understanding how to build discipline, how to understand how other people are looking at the markets, okay? So anyway, I just wanted to point that out. So you guys understand the theory, right? Boiling the frog, because here's the thing. We've already started to boil the frogs because a lot of people have been getting bored. They've been committing more mistakes. They haven't realized that after this 10K top or this short squeeze right here, these are pretty much the highs. I don't know if we're going to actually reach back up there again. So either they bought here or here or here or anywhere in here, they're already at a slight loss, okay? But they're not at a significant loss where they feel the pain. The pain will be felt as we have a slow grinding bleed down, okay? Or in a flash, we drop like, $500-600. And then they might think that, okay, well, maybe it kind of bounces back up, but then it again starts to roll over. This is where you really, make people feel the pain. And ultimately, I do think that's going to happen because like I've said before, on June 26th, end of June, we do have the quarterly end. We have a lot of options contracts expiring. Here's another thing. Today, in the S&P 500, huge day, we have about $1.8 trillion worth of contracts expiring today for the S&P 500, okay? So this is the SPY ETF, the SPY Options chain. Third largest non-December options expiry day in history. And so I probably expect some crazy volatility. And guess what? A lot of Robinhood traders are actually more call heavy, meaning they're thinking of more upside. So if the S&P 500 drops, so let's check out the ES, right, which is the S&P 500 futures contract. So if the S&P 500 drops today, you'd be damn sure to expect Bitcoin is going to drop pretty darn heavily. Because remember that GBTC, the asset, it trades as an ETF on the stock market. So when the stock market starts dropping, okay, more than likely GBTC will probably see some sell pressure from the sellers in the market because it's an ETF. It's a basket that probably gets contained in larger funds, maybe some pension plans, maybe some other traders' portfolio as a diversified investment. But it's not really diversified because when the stock market drops, GBTC more than likely drops. So that means if GBTC gets sold, that will create more selling pressure on the Bitcoin spot contracts, okay? So you could see that GBTC has been rolling over again and again for the last 2 or 3 days, technically in the last month or so because it's created this kind of double top. I've also talked about yesterday how watching 34 EMA and this middle Bollinger Band on GBTC is particularly important. The purple line that you see is the 34 EMA. The red line that you see is the middle Bollinger Band. 34 EMA is important, especially on GBTC, because if you can see going back, right, it was used as support right here in February 2019 before we pushed up against support right there, push up, support right there, push up, support, support. And then once it finally broke through and started using that area as resistance, you could see 34 EMA pretty much held down the price and pushed it down. Again, over here, fake out, broke down. So you can see all through the area right here, right? It's been used as support or resistance flips. So once we start breaking below the 34 EMA, which kind of happened yesterday in yesterday's daily close, it's never really a good sign for Bitcoin. We might hover around here and maybe push back up, but if we start rolling over, the next target for GBTC is at least 9.98, which again in Bitcoin prices correlates to about $8,800 or so. Okay. Actually, I think it's about 8,700. So that's what you want to pay attention to. Okay, GBTC is looking weaker. We have the S&P 500 with a lot of options that are going to get crushed today. We have the boiling the frogs effect, right? So tons of things that are kind of showing you that it's either time to be cautious or, like myself, I'm shorting. Okay, I'm not really seeing anything else in the market to prove to me otherwise that Bitcoin is bullish. I think a lot of people are talking about, excuse me, a lot of people are talking about this, potentially being a left shoulder, maybe a head, maybe this being a right shoulder. I don't quite know about that. Like, maybe if over here we start pushing back up with higher volume, but like what you really see step up as higher volume is sell side volume, with this spike right here. So it's not really proving to me that this is a inverse head and shoulders pattern. Kind of looks like, I don't know, a trap or a fake out, yeah, maybe this is the left shoulder, maybe this is the head, maybe we're creating a very deep right shoulder. But I would figure that if price was actually supposed to be strong and we were supposed to create this right shoulder, you would, from here, then start seeing volume pick up and actually push through this neckline. The neckline, I would probably say, is somewhere around 95.50. So you need high volume through the neckline, not just approaching the neckline, okay? I guess it's possible still. I mean, pretty slim chances because like we've dragged out this right shoulder the same amount of time that we spent for creating the head and creating the left shoulder and pretty much the head. So I don't know, you kind of want similarities between the structure in terms of time spent in one part of the pattern as it has the other. And this isn't really, any bit similar. It's kind of like we've dragged out this right shoulder for like, what is it, almost 5 days now, almost, right? So it's just, time to be careful here. All right. Let me see here. So we spoke about this. Here's another interesting thing. So Tuesdays, typically you get the update on the COT data, which is commitment of traders reports. So if we pull this up, you could see right here. So what's happened is, open interest actually climbed, right? Yet prices again slowly breaking down. This usually tells me that there are more shorts coming into the system, which could imply more selling potentially that's going to happen. Non-commercials or hedge funds slightly decrease their short exposure, slightly, but in large part they are heavy short, because you can see as the numbers go negative on the right side of the scale, this is short. So non-commercials, again, are your hedge funds and your institutions, short heavy. Non-reportables, which are your professionals, your retailers who trade on the CME exchange, they decrease their long exposure. So even they might be getting a whiff of, well, holy crap, we might actually be looking weak, we might actually be selling, so let me decrease my long exposure. So these guys are long up here, which are your professional retail people, and non-commercials, which are your hedge funds and institutions, slightly decrease their short exposure, but largely short. Okay. So we talked about GBTC. We talked about, here's the Bollinger Band too, right? I spoke about Bollinger Bands before. Best way to use them is use them at the highs, the mids, and the lows, okay? Once you start breaking above the middle band and you start using it as support, I mean, you're more than likely bullish. You're going to keep pressing higher until you break below the middle band and start heading towards the bottom band. And so what we're seeing right now is a rejection of the middle band right here. Also, you could see the volatility is tightening, right? So typically you had volatility that was this wide, right? And so now you're having volatility constrict a little bit, which is this tight right here. So usually when that happens, Bitcoin doesn't stay quiet for long. It's a pretty volatile asset, right? In any given month, I think it has a pretty increased, or rather high, implied volatility. So if we're coming to a decision point, it's probably going to be sooner, based on what I spoke about also with S&P 500 contracts expiring. I think we have a couple $1 billion in contracts expiring for Deribit and CME for options on Bitcoin. So I'm thinking, volatility is probably going to come in. So we'll see how the market opens in about 2 hours or so. And I think that's pretty much it. Let me see here. I had warned about Link that you want to start taking profits right at the high of this range. Let's see how that's doing. Okay. So way the heck up here, I told you guys that, anywhere between 450 and 485, you want to start taking profit. All right. Again, not investment advice. That's just something I told my members, that if you want to be careful, you want to look at the highs of the ranges where price has typically gotten rejected, and you want to take profit there. Okay, it's a simple rule, right? Sell resistance, buy support. Don't buy into resistance, and you don't short into support. So what we're seeing right now is possibly, either Link has already topped, which was a high, another double toppy high, and then now it's starting to roll over. Or who knows, it might actually push up from here. Once it starts taking out these highs, it'll more than likely go towards this range high, 480 to 490. I don't know how well it's going to do if Bitcoin starts dropping. I mean, I figure more than likely most alts are going to get crushed if that happens. And that is something that I am expecting. But if it doesn't, right, let's just say Bitcoin again ranges for the next day, 2 days, or 10 days, I think it's pretty good for altcoins, because altcoins tend to thrive when Bitcoin is trading sideways. So it'd be kind of a good money making area in terms of the alt space. But other than that, I think it's become abundantly clear that we've slowly been bleeding down. I think more and more people are getting bored, which is perfect. That's exactly what I want to see. I've been in my shorts for a little while. I've been focusing on other markets. In our community, we have, by the way, a 50% off deal. If you want to come trade with us or educate yourself on technical analysis or understand how markets function or how we read the markets or how we trade the markets, you can come join our community at 50% off. Okay. So anyway, in our community, we've been trading some assets like, I'll give you guys a free tip here, Beyond. Okay, so we entered Beyond right around 150. Yesterday price closed up around 158. So we're technically up about a good 5.1%. So doing pretty good, in our position. We have a couple other positions, but those are reserved for our Advantage members. Let me see. Anything else we need to talk about? I don't think anything special is going on the daily either. Actually, this I find interesting because, as I've spoken about before, as price moved up right here, you could see volume was pretty much on the decline, no high volume. And then I spoke about, this top getting the most surge in volume. And now what we're seeing is, as price is breaking down, you can see volume actually constricting. So once volume picks up, okay, so it kind of does something like this, you're probably going to see more of an accelerated drop. That's, again, if I am right about my theory of this being more bearish, this being more distribution, the sellers coming in heavy, all that stuff, right? If I'm wrong, that means the volume is going to pick up here, and then from here, we're just going to, boom, rip on through. I don't think that's likely, but, I'm keeping my mind open as much as I can, okay? That's it. Come join 50% off. Inquire. There's a Discord link below, or leave us a comment of your thoughts and hit the thumbs up, guys. That's it. Cheers.